Check City Loan's honest review, watch before using. If you're considering Check City Loans, here's everything you need to know before diving in. Check City Loans is a short-term loan provider offering payday loans, installment loans, and even title loans for those in need of quick cash. This service is aimed at individuals facing unexpected expenses who may not qualify for traditional bank loans due to credit or time constraints. It's known for fast application processing, same-day approval in many cases, and availability both online and at physical locations. With interest rates typical of payday lenders, it's important to understand the costs involved, as APRs can be steep. For example, a typical payday loan may come with an APR exceeding 400%, which can become unmanageable if repayment isn't timely. The installment loan option does give some flexibility with multiple scheduled payments, but it's still a high-interest loan. The application process is fairly straightforward. You'll need basic identification, proof of income, and a bank account to apply. After approval, funds are deposited directly into your account, or you can pick up cash if you're at a store location. However, high interest rates make these loans suited only for very short-term needs, like emergencies, where repayment is achievable within a month or less. They're not ideal for handling ongoing expenses, as the high costs can quickly compound. Customer feedback on Check City Loans is mixed. Many appreciate the convenience and quick funding, particularly for those with poor credit or limited loan options. However, borrowers frequently report frustration over the high fees and rapid escalation of debt if payments are missed. Be mindful of automatic withdrawals and potential overdraft fees if funds aren't available in your account. Alternatives might include personal loans from local credit unions or online lending platforms that offer more favorable rates. In summary, Check City Loans can provide a solution when you're short on cash and options, but it comes with high costs and risks if not repaid quickly. If you decide to go forward, approach with a clear repayment plan to avoid extended debt.